Looking at the structural levels of Bitcoin in the past 24 hours, yesterday's video, Bitcoin was up here, just around 68,500. We saw it came down but couldn't hold on to that structural support level of 68,156. What does that mean? If it can't get above, it's going below. So it made its way down to 67,519. Unfortunately, at the 67,519, it didn't react to that properly. It didn't create a support level and come up. That meant the 66,961 level was in play, and we actually tapped it. This is why looking at structure is so incredibly important. I'll just reveal these levels. We saw that price then rebounded to the 67,519 level, but it just couldn't get above. It faked out just like it did above 68,156, but it came down into that safety net at 66,961. It was caught and rebounded upwards to the 68,156. You can see price, the only certainty in price is it's just related to movements between structural levels. It's either getting into structural resistance and not holding, and therefore coming back to structural support, or it's doing something else. That is, it's getting above structural resistance and going to the next one. So you can say if it's not going above, it's going below. If it's not going above, it's going below. If it gets above but doesn't confirm itself, it's still coming back. This is why we must know what the structural levels are on the charts, especially that we're putting money into. However, we also need to look more broadly into the Tier 1, Tier 2 and Tier 3 charts. And you can see from those charts, if you've been following the cheat sheet, that the S&P 500 and the Nasdaq have had a degree of negative price momentum since about the second week. And we've also seen that the Dow and the Russell, they did explode, but they're just retracing at the current time. This retracement is a little bit longer than we would have hoped for, and we're also seeing some positive momentum in yields as being reflected in gold and silver. We know that there are always opportunities inside the crypto market. There's opportunities inside every market. What we're doing here, and thank you for everybody who reached out and said they really like this analysis, so we'll start to cover it off. Inside the ETH ecosystem, we can see that the river of alts is moving down. Real world assets is the same. Solana is the same. Gaming is the same. The top tier cryptos inside the service, which are all marked up with their structural levels, are moving down. And of course, this is the case because Bitcoin, when Bitcoin moves up, the alts move up. When Bitcoin moves down, guess what? The alts move down. This is a law of the crypto market. With AI and big data, we're seeing a retracement as well. With the memes, we're seeing a retracement. Audi 1000 sats, Brett, Whiff, Boom, they're being hit the most. With distributed computing and file storage, we can see Theta has been hit the most currently. One reason I like to really look at the market like this is because we're just following groups, and the groups are just talked about inside the masterclass. We can see the wallets. When the centralized exchanges get hit, typically the DEXs and the wallets tend to turn around if it's a continuation movement. We're seeing that the wallet safe is actually up 1.58% for Binance Labs. And if you think about Binance, it's the world's largest crypto exchange, so they've got the money so that they can actually push money into different projects. CTK is up 16.11%. It's inverting the market, and we really like to see things like that. And CERTIC was inverting from a degree of time ago. The reason that we try to find inverters, and CTK is definitely an inverter. If we find this, if they start to come down, we expect the main markets to be coming up, or the crypto market to be coming up. This is an inversion signal, such as SAFE. Also, you typically see weakness inside some of the cryptos. They can give forward signals. For example, LDO. That was really sensitive to negative price action inside Bitcoin, which means it's going to be very sensitive to positive price action inside Bitcoin as well. Within the Bitcoin ecosystem, we can see that Ordi and Lever are being sensitive just like LDO. In the last video, we were looking at Ethereum, and the levels we were looking at were just here. I'll just put everything on the screen so I can go through it. We saw ETH, just like Bitcoin, starting to go positive above that little bit of a structural resistance. In ETH's case, it was at 35.25. But unfortunately, just like we saw Bitcoin didn't confirm as structural support, we saw that we lost the 35.25 mark. There were lighter areas of structural support at 35.03 and 34.95. But the structure inside Bitcoin is what turned Ethereum around. There are interdependencies that occur across charts. And one thing that we can see, when we had a rebound up, that 35.03 just pretty much nailed the top of Ethereum's just pullback there. And then when we came down next time, the 34.95 mark was the topping out of that resistance. You can see there's a really big difference between Bitcoin's chart and Ethereum's chart. That's because there's this structural gap inside from 34.95 down to 34.06. That means that because there's weaker structural support in here, it means that Ethereum is more negative than Bitcoin. The other price chart we looked at yesterday was Solana. We saw Solana rallying into that 182.57 mark. It was looking pretty good when we looked at it, but unfortunately it just couldn't hold. It came back and underside retested that 182.57, tried to hold the 179.54, and that's been a central point of gravity. But what kicks back Solana and Ethereum and all of the alts, and you've seen it across all of those different sectors, is Bitcoin. When Bitcoin is coming into structural support, expect a bounce. And also, if Bitcoin is coming into structural resistance, expect a little bit of turmoil. We can see currently that Solana is an incredibly powerful project, and it has a lot of price attention right across the crypto market. There's the expectation after the Ethereum spot ETF is approved, and it's ETH spot ETFs will start trading tomorrow. That the next cab off the rank is Solana. So people are getting really interested in getting into Solana, and why not? If we see more negative price action inside Bitcoin, this 170.12 mark is really, really strong. But think about what happened in the last 24 hours. This was looking pretty good, but price moved against us. Does that mean the institutions want us to think the price is coming down and they will instead go bullish and catch everybody off on the wrong foot? Please let me know what you think inside the comments. And this is exactly why we must have three-dimensional thinking. A bullish case scenario would see us getting back to this 179.54 structural resistance, turning it into structural support and re-challenging the 182.57. And then seeking to get above that 182.57 and moving upwards. A bearish case would have us coming down to the 173.35, always in a wave, and then coming down to find structural support at 170.12. Hopefully you can see why having three-dimensional thinking is really very, very important, because price can move upwards, it can move downwards, and it can go flat. We apply the CTKS code as to force us to think from a down position, a neutral position, and an up position simultaneously. We may think, like yesterday, that the percentage of the upward probability movement would be very, very high, but that also doesn't mean the down and the neutral is zero. We always make sure that we're just thinking in terms of these three dimensions, down, neutral, and up. It's baked into how we look at the market. Unfortunately, many people think in only terms of one dimension. They will say, oh, it's only going down or it's only going up. And when a price moves in a wave, and it's always going up and down, they start to panic. And when people panic, they typically look outside themselves and get angry and start blaming. Both of these things are the license to lose money inside financial markets. Don't worry about certainty, worry about probabilities. Don't be a light switch, be a dimmer. And it's always the case of just bypassing any emotion and just getting into learning, getting into patience and rules. You know, even in an uptrend, and I showed after the halving just how negative things can get. They can go positive and they can go negative. Price is always just moving in a wave, and we expect upward price momentum, but that doesn't mean we're going to get retracements, because we are. There are always opportunities inside every single market, but always think to yourself, if you're finding yourself inside zone 1 and zone 2, and you'll know that because you'll be emotional, because you will be feeling like you just can't get the hang of things. That's probably because you're only thinking in terms of either price is going up or price is going down. If you think price is going up, you'll be all in and more, and then you'll find price goes against you, and then you'll tend to sell. So, for example, if you think price is going up, you go all in and more, expecting this positive price path, but instead it goes against you like this. You sell here for that particular chart to hit structural support and come up, and therefore go against you again. You think, oh, okay, I just missed it. I'll go all in and more here, and then it goes down again, and you sell. This is called the death of 1,000 cuts, and it's really common inside zone 1 and zone 2. Probably the greatest learning that you could ever possibly do to get away from zone 1 and zone 2. And these are the 4 stages that every single investor and trader progresses through. So it's really normal to be there. It's in no way a reflection on you if you're inside zone 1 and zone 2. It's a rite of passage. Instead, we've got to get into learning, into patience. Now, why patience? Because if you think it's going up, you place your buy levels at strategic levels below price, and then you wait. Let's make it practical and real. In the last trading session, Bitcoin was up here and it was looking really quite positive. It was cutting over and then they pulled the rug. But you would have seen it weakening at that 68,156 mark. If it weakens underneath there, the bullish case is off the table because it's just violated that particular level. We know it's moving into deeper structural safety nets. The way to go is to basically say, okay, the probability is that Bitcoin is coming up, but I'm going to be placing my buy levels at strategic levels inside the chart. And you can place them lower than that as well. Sometimes you get these long wicks. These long wicks can be fantastic. And that's not John Wick, that's a long wick. This is why I always say price is always moving in a wave. It's always coming down and then going up. And where is it moving between? Simply structural levels. That's it. If you understand that your focus is not on price, but on the structural level, it is literally a game changer. One thing to be really aware of, whenever price goes up quickly, everybody jumps on board and says it's rocket, it's going to the moon. And whenever it comes down, people say Great Depression, banking crisis, real estate problems, everything is going to crash, Great Depression. Literally, news stories are pretty much, well, crazy. In other words, if you listen to the news, you're going to be shaken out of your positions time and time again. All that's happened here is we've come up into a structural resistance level at 68,156. And don't forget, these are not brick walls. They're elastic, gravitational by nature. It can push through it. And this is probably something that takes you a little bit of time to learn on a structural level. It is not a brick wall. It's like a safety net. Coming down, you can see safety nets. But going up, you expect a brick wall, but it's not. It can go higher. Everybody wants certainty in life, but the financial markets are not like anything else you'll encounter. The certainty is through structural levels. Just look at how price reacts to a structural level and then make a decision from there. These structural levels are actually created through 2 levels of standard certification. They're quite involved creating these levels. They're not just randomly drawn, they're drawn with a very scientific and statistically sound methodology. If we're thinking about a bearish case, we would expect this 67,519 level to be underside retested and to resume down to that 66,961. This to become weaker and head down. But just please bear in mind that the 66,448 level and the 66,118 level are becoming stronger and stronger. That's why you can get these long tail wicks into these areas. Things can reverse very, very quickly. A bullish case scenario would see us coming up to the 68,156, breaking through it, coming back, retesting it, and then going forward in a wave-based function up to the 69,778, and just confirming that as support and going forwards. When you think in terms of structural levels, it's an absolute game changer. And structural levels are rightward looking. They're not leftward looking, they are rightward looking. They're a leading indicator of price. And you can see that each and every day. It just plays out with 100% certainty. Certainty that price is just going to move between structural levels. If you keep too much attention on price, you'll get wrong-footed. Keep your attention on the structure. Looking at structure instead of looking at price is an absolute game changer. The vast majority of people inside financial markets have an absolute calling. There's something about the price and the fact that you've got a ready-made business with ready-made buyers and sellers all lined up that is just so attractive. If you're here, you've been called here. So that's why it's important to do your positive affirmations, saying to yourself, I am dedicated and committed. I win or learn and never blame. Now, why do we tack on this? Never blame. Because if you blame, you learn absolutely nothing, unfortunately. And that means the loss that was just captured inside that lesson, it's got to be learnt again. And you'll probably end up paying much more for it the second time around. That's why you literally want to become a learning machine. Every time you blame, you're missing out on something really, really valuable. That's why as a community, we don't blame. We just win or learn. If we get something wrong, it's not like a school exam test. You're not going to ever get 100%. You're not going for a high distinction in terms of your ability to predict price. You just look at price with interaction with structural levels, and you've got everything that you need. So therefore, you can say, I know the universe wants me to succeed. I just need to look at the markets differently. This positive affirmation that we say as part of the CTKS creed. Every day I show kindness, integrity, and gratitude. Why is that important? If you're showing kindness to other people, you're showing kindness to yourself. If you're showing integrity, it means that you're trustworthy, and it means you can trust yourself. If you're showing gratitude, it means that you're looking around for things to be appreciative of and not miserable with. Gratitude is a very, very powerful thing. And just to know that opportunities and life reset daily. It doesn't matter what happened yesterday. Every day is a brand new day. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.